Hello, everybody. Welcome back. Today we're gonna talk compounding rate of Bitcoin. The last time I made a video about Bitcoin nodes. Today we're gonna talk about the Bitcoin price. So, what is the compounding rate? So, I did some research over here. We're gonna ask like how does compounding rate um cause your money to grow? So this is here. And the simple definition is compounding interest makes your money grow faster because interest is calculated on the accumulated interest over time as well as on your original principal. So basically, you're getting a growth over the previous growth on your money. So that's called compounding. Compounding can create a snowball effect. So the more it's rolling, the more it's growing, and the more it's rolling over the previous growth, and then it's keep on rolling and growing and growing. So that's what we're talking about when you say compounding rate, compounding growth of Bitcoin, as the original investment plus the income earned from those investment grows together. So to visualize this, we're gonna look at this over here. This is the a compounding calculator. So we're gonna start with 15K, 15,000 US. Put in. We're gonna be conservative, like 35% a year for 10 years, and we are going to put in $200 a month, and we're getting about this much, um above half a million, so it's going to be 680,000 at the end of 10 years. So this is it basically. So, and this is a chart, and if you look closely over here, I'm going to show you over here. So you see the first year, you kind of like your 15,000 accumulated about somewhere 6,000, and you only have about 24,000 at the end of the first year. Second year, you have 36. At the end of the year of the second year, you get 26,000. Third year, you get 54,000. You see, so you're only growing very small amount, very slowly in the first few years. And what happened, see, you was growing at about like 16,000, like 6,000, 16,000, 32,000 you adding every year. Now look what you're adding in the eighth year. Right? In the eighth year, you're adding $300,000, right? In the eighth year, you add $300,000 on your like initial growth, like initial money, right? So from the 7 year, you ended up with a balance of 237,000. In the eighth year, you add 300,000 on top of that, right? So so that's called compounding, right? So from this, and then a year you get um final. The final is about 444,000, right? So that's how much, right? You're getting in the ninth year and the 10th year. That's when you went from 444 to 642,000. So that's over $200,000 in a year, right? And remember, you started with only basically like 15,000, right? And then Yeah, so that's how much you started with. So this is why it's really important to look at Bitcoin in this angle, because most people think they can just time the market, like sell the top and buy the bottom and all that. Yes, you may be lucky, but like you can't necessarily say when is a good time to buy in, when it's a bad time. If you're waiting for the price to drop, right? So you may make a mistake. If you're waiting for the price to to go up to sell, you may make another mistake. So it's better to just let it sit there and wait. And if you look back here, what's the compounding rate of Bitcoin? Um, um, yeah, in summary, in the last 13 years, Bitcoin index had a compounding annual growth rate of 102%, 102.9%, right? So a standard deviation of 151 and a Sharpe ratio of 0.83. So 102% of compounding growth. Of a year, we only put in, remember, a year we put in 35%. So that's really, really conservative, right? So we only put in 35%. Like if we put in, like in the past 13 years, I was 100, over 100%, right? Let's say you put in 40%, right? That drastically change our result, our end result, right? So you're over a million, right? In 10 years, you're 15,000, go over a million in 10 years, and then you would put in 500 a month. So that would be about so yeah, that would be, you would be putting in 500 a month, right? So that's how much you would be putting in, and then yeah, so basically that's why it's, and then you'll be put in the 10 year, you would be putting in another 24,000 because you're 200 a month. At the end of the 10 year, it's gonna be 24,000, right? So yeah, so yes, it's amazing. It's amazing. And if you bring this up to full 45,000 to 45% a year, right? Like for 10 years, you over, like that's over $1.6 million. And if you put it to 50% a year, right, that's kind of half of what Bitcoin did in the past 13 years. That's over 2.6 million. And if you put in 20 grand instead of 15 grand, um, that gives you over $3 million in the next 10 years. So I don't think that's out of reach for most people. Like, um, probably most people have like some a down payment. Let's see, for me, if I was like thinking about buying a house right now, I would just, I'm not giving a financial advice, but I'm just saying what I would do. Sorry, but I would just put in the down payment I had for a house. I would just put it into Bitcoin and let it grow, let's say 40% a year, right? Just put that 20,000 to Bitcoin, let it go for 20 years, for 10 years, and then I would just rent, and then put this $200 I would be paying taxes and maintenance into it, and then we calculate, it gives me over over $1 million in 10 years. Because the reality is the value of the house. Let's say if you're buying a house, like what's um if you wanna have, let's say, $1 million house, right? So if you putting in 20%, right? of that. The 20%, that's 200,000. Um, what is uh 20%, 200,000, 10%, 100,000. So that's a lot. So if you're buying a house for 500,000, um, right, $500,000, you at oh, I have to erase that. Let me go for $400,000 house. Okay, 400,000. You put it in. Uh, let's say 15 15%. That's 60,000. It's pretty high. A lot of people don't have that, but let's go 10%. 10%. Um, 40,000. Right. So 40,000. Um, if I had like, if you wanna, let's say $40,000, right, for a down payment, that's a lot of money for a down payment. Like, this money just gonna go sit there in the house in a rot, because the value of the house is not gonna go that much, right? So the house is not gonna compound like 10x in the next 5 years. There's no way, right? So in Bitcoin, that 40,000, it's a lot of money, right? So that's over $2 million. Like, this $400,000 house, you're gonna pay in, right? So right now, it's gonna be 400,000, right? And you're gonna take that 400,000 from the bank. You're gonna give them 40,000, right? So you're still gonna owe them. You're gonna owe them 360,000. Let's say the house goes up 2x in the next 5 years, right? And then let's say it goes up 5x. The house goes up like 3x, okay? 3x in the next 10 years. If the house goes up 3x in 10 years, so we're gonna multiply that by 3, okay? That's $1 million house. So now you're gonna have to remove like the money you're gonna give to the bank, because you're gonna pay the bank the interest on that money. So you're gonna take out the amount, right? Uh, okay, I made a mistake here. I'll go back. I'm gonna take this out, right? Minus um I'm gonna take out uh the this amount, because by the time you're done paying mortgage, because 360,000 is not gonna be 316,000, right? It's because you don't have to pay interest on top of it, right? It's probably gonna double by the, like, it's probably gonna be one um a 2/3 of that, right? So 300, it's probably gonna be for 500,000 dollars you'll be paying, right? So the value of the house you're gonna have left, right? So the value of the house you're gonna have left is only gonna be 580,000. Even if the house goes up to $1 million, you, because you owe the bank initially 300,000 plus interest, you're only gonna have 500,000 left on the house, right? In 10 years, even if it goes up 3x. So let's compare this to Bitcoin. Like, this is how much you're gonna have in terms of asset on the house. Like, let's say nothing happens, it didn't burn down, you didn't have fire, you didn't lose it because you couldn't pay your mortgage. All of these things, interest didn't goes up, right? Because interest go up, right? A lot of people lose their home because of this too. So all those risks put aside. But with Bitcoin, you don't have to worry about your interest going higher, you can't pay, right? So you just rent a house, and then you just pay your rent, and you just put in a saving of 200 a month, right? That's what you get. Like you got over 2 million. So you compare this 2 million to this 800,000 left. That's a lot of That's a big difference, right? Right. That's like 4 to 5 times higher, like almost 5 times higher. But let's say 4 times more money. Like that's a difference of keep working in the next 10 years and taking a break in the next 10 years, right? And retire and potentially retire. I'm not saying $2 million gonna be gonna 2 million may not be able to retire you in 10 years, but let's say you add a couple years to that 2 million on Bitcoin. Okay, you add it to a couple years. Look at how much you get, right? You're getting 5 million. You understand what I did? Like, yes, like this much for the house it's not gonna go that much in the next 2 years, like after the 10 years. It's probably gonna go up 5-10%. But on Bitcoin, you're getting this, right? You're getting 5 million instead of like 2 million. And let's say you want to add another year. Let's say you add one more year, you're gonna save 7 million, right? So now let's say you want to take out. Now you're talking about retirement, right? So you wanna withdraw now, right? You don't wanna withdraw some money. So what we're gonna do, we're gonna set up a withdrawal rate. So we're gonna start with that 7 million. Okay. So after the 13 years, I'm gonna drop it down to 20%, right? And then so now you're not gonna withdraw. You're not gonna put in. Now you're gonna just withdraw some money. Now you're gonna take out, say, 6,000 a month. Okay, you're gonna take out 6,000 a month, and you're gonna calculate that how much you're gonna have in 13 years. So now, in the next 13 years, after the first 13 years of saving, you still even if you're taking 6,000 a month, you still left off with 96, right? Like 96 million, right? Because you remember, because after the first 10 years, you end up with 7 million, but because you're taking, even if you're taking out 6,000, right? You decide to retire, um, you still end up with 96,000. Now, let's say we doubled it. Let's say we go 10K. Let's say you're taking 10K a month, okay, in the next 13 years out of that 7 million. Now you still ended up with 93 million. I don't know if you noticed, like it didn't change that much from doubling the the monthly taking out, right? So 10,000 a month, you still end up with 93 million in another 13 in your 13 years of retirement. Let's say you put that in for 15K a month, you still end up with close to $90 million. So this is like this kind of math most people don't understand. And by the way, this is only growing at 20%. Okay, I'm not putting in like crazy 50, 60%. I'm just putting in 20%. So once you have a potential massive amount of money already, it doesn't matter how much you're taking out, right? You never you're not gonna run out of money anytime soon, unless if you're taking like 100,000 a month. But even if you're taking like 30,000 a month, right? I know in the next 15 years, you're gonna have like things gonna be very expensive. Like 15 years from now, like I mean, rent gonna be potentially 5 to 6,000 a month. It's already there in some places, but I mean, for sure, it's gonna be at 6,000 to 6 to 5,000 a month, 6 to 8,000 a month at least. So you're taking 30,000 a month, right? So look at what you get. You're still at $78 million, right? I'm saying you're taking a, because the grow you're growing at 20% compounding. Now, even if you put in like 20 years on it, right? You're not. Let's say you're doing that for 20 years. You're taking out 30,000 a month, right? So you're still at like 300 million, right? 300 million, like in that 20 years. Like you're not worrying about money anymore. Your problem is like you worrying about what do you want to spend your money on, right? But potentially, and you see the growth over here. This is a chart, um, right? The growth, right? So this is the revolution. This is the mind blowing effect of Bitcoin. It's not like you having a money that's immortal, right? And people say we're not gonna spend on Bitcoin. Well, if Bitcoin becomes 99.9% of your portfolio and your income is just a fraction of it, what are you gonna spend? Like you wanna take a vacation, you wanna retire, then what are you gonna spend? You're gonna spend the Bitcoin, right? So yeah, I mean it's just like right now I would say somebody to just quietly accumulate at the rate they can. I mean, if you can put in $50 a month, just put in $50 a month. Like I mean, like most people waste $50 a month in so many um unnecessary things. Right? Just put in the just put this in and then wait to see what happens. So this is where I'm gonna leave it, guys. I hope you enjoy, girls and guys. I'll see you again in the next one. Bye over.